Okay, good morning, good afternoon, everyone. We're going to get right into the stock market technical analysis. If you're making money today, then you took my analysis over the last couple days, and you sold the rip. All right, and so I just want to reiterate that I've put out several videos over the last week or so saying that it's a sell the rip market, which means that you're going to have counter trend rallies. Those counter trend rallies are designed essentially, it's kind of a mixture of two things. One, counter trend rallies are shorts covering, and then it's also dip buyers in there buying the dip. But ultimately, they're designed to kind of keep people in the sorry, I don't know what that noise was. Keep people in the slope of hope. All right. So when you're in a corrective phase or a bear market, you're going to follow the slope of hope, which means you come down pretty hard and then you do a counter trend rally, and then you come down hard, keeps people in the trade. All right. So let's get into the charts, and you guys leave me a thumbs up if you find any value in the content, and then if you're new and you want to learn how to spot your own trade ideas, take my technical analysis course. I teach all these concepts. These are real world concepts in video trainings that actually work. And if if you're not interested in the course, follow along in my on my videos. You'll see that they work over time. We don't get every trade right, but the analysis is sound in general. So going with triple Qs now. All right, we have a bear flag playing out right now. We're pretty much crashing, continuing the crash basically. But what I've got marked out here is you've got this flagpole, then we flagged out for a couple weeks or whatever, and then boom, breaking the flag today to the downside. That sets us up for the projected target. The way you find that projected target is you take the flagpole like this, and then you just kind of, if I can grab it, you just extend it out to about there, and it sets us up for this area right in here. All right, so at a minimum 327.50, and then maybe down to 316.23. Good support in those areas. You can see as I roll out on the daily chart, this trend line, or let me go to the weekly for this one, the upward price channel in triple Qs has since the 2009 lows. So here's your bull market, and you can see as I roll up, this is the projected target, would be the top of that price channel. All right, so yeah, that's where I think we head probably next week. Maybe it takes us 2 weeks to get down there, but I think it'll happen relatively quickly. Again, everybody's been hiding out in the FANG stocks. So let's flip over to those real quick. And I just want to point out some things there. Again, retail, everybody's in hiding out in the FANG stocks. They just will not sell their FANGs. They think they're the great companies, and for the most part, they are great companies. They make a lot of money. They're very profitable. That doesn't mean they can't correct 30 or 40%. Okay, here's Google. One thing I want to point out. All right, Google earnings came out on the February 1st, and it was up in the after hours. It opened about 10% higher. Okay, that rally way up here when we made a new high was a divergent high. So you see the negative divergence, the momentum is dropping off on this thing, on the RSI and the PPO. And it's just nothing but sold into. So smart money was selling into that strength. And then obviously dumb money was thinking that Google's going to the moon. And it's pretty much given up its entire earnings pop. And we're coming below the 200-day moving average. Just weakness across the board in this chart. Flipping over to Amazon. So Amazon, we'll see how the day closes, but if I go to the weekly chart, this is your 2009 or 2009, 2008 lows. Here's your bull market in Amazon going back, over a decade. And you can see on the weekly chart, we've held support. We had a sell signal on the weekly chart right here on the week of January 18th. Big impulsive sell down and break of that trend line. Then the last 2 weeks, or the last 2 weeks there, they did a counter trend rally, recovering the trend line. But you can see where we're trading at right now. So depending on where this closes, we'll see if we actually get a break and it closes back below this trend line. But to me, as far as I can tell, we had a sell signal, a counter trend bounce into resistance, sell the rip, and then we're going to continue lower. All right. If I look at the daily, you can see where we are we are breaking that trend line right now on the daily. So we'll see where we close. Maybe they'll pop it up and try to close it right on that trend line, keeping everyone guessing. And then, not a whole lot of technical change in Apple, but we did get rejected right at resistance at 175.92. You can see rejected there, back tested it, and down we go. So just weakness there. Microsoft is right at the 200-day. Probably going to close that right at the 200-day, and then we'll see, if we get a break next week. But we're back at the 200-day after bouncing. So in general, that's weak. And then Facebook has been nothing but weak. So lots of weakness in the FANGs, and the market just can't go higher if the FANGs are selling off, the market just can't go higher. Also, if you look at the sectors, we've got financials selling off today too. So we're seeing weakness in the financials, weakness in tech. There's just weakness across the board, which tells me that there's much lower prices coming. Another look at tech would be XLK. Okay, here's XLK. Again, here's your daily chart. Here's your trend line that we were holding through 2021. All right, we broke trend, back tested once, back tested twice. They made it look pretty good. You can see here, sorry, I had these X's for areas that I was looking to potentially stop out at. But look, we back tested, recovered that trend line, failed. Popped it above again right here, failed. Closing, and now we're pretty much impulsively selling down. So right at the 200, but we're probably going to break this, if not today, next week. Okay, flipping over to gold here. Gold bullion's breaking out a little bit, but I don't think it's going to break today. But here's this triangle on the daily chart, this big isometrical triangle, and you can see they're trying to pop that right here above. We've had lots of tags of that from resistance. We'll see. Maybe it'll break out today, but in general, it's a pretty strong day for miners. And as the markets are selling off, you can see that all these gold miners are ripping to the upside. So far, all the trades I've been talking about with these short trades going down and these long miners going up are all working out pretty nicely today. So let's look at some individual trade ideas. Now, again, the ideas that I've talked about, what I'm going to point out right now are not, a lot of these ideas are already starting to play out. So they're not going to be the most objective areas to take a new position. But again, that's why I've been talking about them for, the last couple weeks. LLY. All right, you have trendline support / resistance at 240 and the 200-day. And as I zoom in, breaking down. Now, this one's going to be a little bit more of a slow roller, but we are breaking down, and it does look like we're heading down to about 218.55. Again, this one was spotted. We had negative divergence that's been building. So this was a divergent high. This was a divergent high. We had a trend line to watch for a break of, and we got our sell signal right there, basically on January 14th. It's profitable right now. So moving on. Okay, AA, this is Alcoa. I'm going to cut the short here. It's just not working how I'd like to see it work with the market coming down as strong as it is. Alcoa is kind of rallying. So here's the thing. We entered the short right here at 71.20, right at resistance. All right, the last couple of days, it's really been testing that. But the price action today with the market coming down and this kind of moving up, we're just going to cut it with, very minimal loss here. So, it's about a 2% loss. And we'll just move on because these other ones that are working out as expected, this one's not quite working out. So I'm going to leave that one. Moving on. Okay, Qualcomm breaking back below the support level of 173.87. So this was a big support shelf. We broke back below it once, recovered it, back below it. So this should be the real deal now. And I suspect we're going to head much lower. At a minimum, we've got a gap to fill. So 153.50, that should be minor reaction support and the 200 days down there. So probably going to get a little bounce down here. And then we've got this gap to fill at 139.02, which is a high probability target. So looks good to me. I think we're heading lower from here. NVIDIA. So NVIDIA looks like it was kind of flagging out a little bit here on the daily chart. So we have a flag pull. We've got a flag. We're starting to break right here on the to the downside. So as far as I can tell, NVIDIA is heading much lower. And then Nvidia also off the March 2020 lows had this upward trend line right here. And you can see we're holding support. Up here at the highs, we started to build negative divergence. And we got a sell signal back here on January 19th. So we sold down, kickback rally into resistance, and now we continue lower. So again, this is what I talk about when it's sell the rip. You get the sell signal and you break down, and then when you rally, you look to sell into resistance, and then you continue down. Just across the board, all these short trades that I've been talking about are really working. So I've pointed out key levels on a lot of those. Gold's looking good. Oil is ripping to the upside at 4%. We'll see if this holds. I wouldn't expect it to hold, but oil is exploding to the upside. And that is, we've got this inflationary thing going on pretty strong right here, where we've got the market selling down and we have these inflation trades are really working out. And again, in periods of inflation, I just want to point this out and then I'll wrap up. In the SPX, this is the S&P 500. And if you go back to, on a weekly chart, and go back to the last kind of inflationary period that we had, which was in the 1970s, you got to roll back all the way back here, and you'll see that stocks don't, always do great in inflationary periods. So this was a big inflationary period where inflation was running hot, and during that period we had big corrections, or bear markets. Basically, this dropped 37%. This one here dropped 47%. Big corrective bear markets within that decade-long inflationary period. So we might be seeing something like that, where the most stocks are going to fall down while we have inflation running hot. Okay, guys, I'm going to wrap up. I'm not going to be around this weekend, and I will be gone Monday and Tuesday next week. So I will get a video out on Wednesday when I'm back. Good luck, everyone, and I'll catch you on the next one.